I did not like this idea. It depends on how much the house costs and what, but if you just took a 4% interest rate, for a 30-year, it would be $2,300. For a 50-year, it would be $1,900. So you're saving almost $500 a month in terms of affordability. But by the time you finish paying this bad boy off, the 30-year, you pay $359,000 versus a 50-year, almost $700,000, right? It's a gargantuan difference just to make people feel better, and that's not the way to do this, right? There's so many other ways. I feel so strongly about the momentum that we'll have going into next year. The one big, beautiful bill kicks in. We'll have a more accommodative Federal Reserve. I think economic activity is going to build. Companies will be encouraged to build here because they'll be able to write a lot of that off. I think we're on the precipice of an economic boom, and with lower mortgage rates, that will help the housing market a lot. I'd rather see President Trump do some other things with that tariff on it.
Right. But one thing that we also could see into the new year is the effect of some of the pullback on the regulations that were strangling a lot of businesses. And I don't think people realize that, especially possibly maybe in the housing market.
Well, unfortunately, a lot of it is local, but there's a lot of pressure, particularly to hey, bring down this red tape. Let's bring it down. And the problem is the starter home, right? Even right now, I think the average age for a first time for these home buyers is just 40 years old. The same people that were buying houses 20 years ago are now buying houses now. It's really unfortunate that before, the first time home buyer, the average age was like 28 years old not long ago. So you had a young couple, you got married, you had children, you bought a house, the American dream. And that's obviously one of the big issues in this country right now.